If we look at 2008, 2009 crisis, gold went from basically 700 to 1900 with all that money printing. If you look at this printing, I would say that gold can easily go to $4,000.
Hey everyone, this is Elijah Johnson with MilesFranklin.com. And with us today is Frank Holmes. He is the Chief Executive of U.S. Global Investors. Frank, thank you so much for joining us today.
Happy New Year to you, Elijah.
Definitely. Happy New Year. And I wanted to get your perspective on, about the new year. We saw gold and silver rally into the end of the year and even afterwards still continue to rally. What is your perspective on what's driving gold and silver right now?
Well, the biggest factors is, and a macro trend, is this MMT, modern monetary theory. And it's being practiced by all G20 countries in different forms. But the leader of the pack right now is the US. And what we saw was the dollar falling. And there's a very strong relationship of the dollar declining and gold going up. A factor that also drives that are negative real interest rates, which we have today. I just don't believe that inflation is running at 1.3%. It's substantially more when I go buy food, when I go look at anything in the past year, they're up. So that number says it's only 1.3 and the 10-year government bond is only paying me 0.85. I'm losing money. Why would I buy something for 10 years losing money? Anytime that happens, then gold starts to rally in that country's currency. So the US has a negative real yield, but so does the EU, and so does Japan. So I think what's important for gold investors to recognize is the G20 finance ministers, or central bankers in particular, last a lot longer than presidents and prime ministers of the G20 countries. So what we're seeing is basically a country club. They're meeting all the time. It's synchronized spending of money, synchronized using the monetary the tools to try to stimulate their economic engines. And so I think it makes a very good case for gold. We had a big rally in August. It peaked out because we saw real interest rates. Actually, the 10-year government hit 50 basis points, and then it rallied up to 95. And then it starts falling back again. Dollar starts falling. So we had this sort of waving motion happens with the price of gold. But what's important is that in the past 20 years, this century, gold has been up 80% of the time.
So kind of looking at the big picture is what you're doing and saying that the dollar is falling and therefore that's why gold is rising.
Right. And it's not going away. And I think you're going to see gold run in all countries' currencies as they continue to try to use this MMT of taking money and just printing it.
Definitely. Now, with respect to, you're saying it is going to continue, you say. So what is your outlook then? I suppose you're bullish for 2021.
Well, earlier this year, much earlier, so in 2020, I commented that to turn this COVID problem around globally, the U.S. is going to end up spending $10 trillion. And that's what it looks like outside the rhetoric between Democrats and Republicans. But it's basically each time we have a crisis, the last one in 2009, the Fed balance sheet expanded $3 trillion. So now we're going to see it run up to $10 trillion. And I think that's what's really important to recognize. And each of these crises require more and more money printing to try to get the economy going again. And this always bodes well for gold. And this has been going on for 20 years in a very sort of systematic way of using monetary policies more and more to try to stimulate economic activity. Real art, beautiful Andy Warhol prints, they're going up in value. Gold is going up in value. If we look at the last cycle, Elijah, if we look at 2008, 2009 crisis, gold went from basically 700 to 1900 with all that money printing. If you look at this printing, I would say that gold can easily go to $4,000.
So $4,000, so that's based kind of on what happened with gold in the past?
You look at the amount of money printing and the Federal Reserve balance sheet expanding, and 3 years later, what happens, it sort of goes through the economic engine, then gold gets a reset button. And last time and previous times, to take a look at this money printing, you get this sort of big move. So when I went and applied the math of similar patterns, then it would give you a forecast that there's a high probability that gold in 3 years will be over 4,000.
Now, with respect to silver, what is your price target for that?
Silver is very special because it has a huge industrial footprint. It doesn't have central bank owning gold for reserve currency status, but it is very important for the big push for green energy. Green energy, that's solar panels. Guess what? Can eat a lot of silver. The other part that's really important is the idea of silverware, the concept of plating metal with silver. Well, viruses can't attach to silver. Gold's very expensive. Gold wears be better, but silver, it doesn't attach. So we're going to see more and more plating of silver. The least expensive is copper. But I think that silver has this huge footprint that's necessary along with copper for the green movement. The $1 trillion that President Biden was suggesting what's going to take for infrastructure spending and what Europe is spending on it.
Do you have because you mentioned there, your kind of price target for gold is around $4,000. Do you have a similar price target for silver?
Well, it's a ratio, and we go back to the crisis of 1980 when that ratio got down to 17-1, when Bunker Hunt tried to corner the silver market and gold hit $850 and silver at $50 an ounce. I don't think we're going to see 17-1, but I think you're going to see probably a number like 50-1. So that would definitely propel silver much higher because of not only the other thing that's really important, Elijah, is there's a coin shortage. It's interesting. I was at the Nike store and they said, please, just credit card or dollar bills, no coins. There's a coin shortage. So just think of what silver coins, there's a shortage. And I think it's only going to grow as more and more people, the silver offtake for silver coins. So I think we could get a big positive surprise.
Now, a 50-1 ratio at $4,000 an ounce for gold would be about $80 silver. So that's getting quite close to triple digit silver.
It is. It is.
Definitely. Now, one of the things that some people talk about is gold itself is money, right? It's a store of wealth. And you don't invest in gold to get rich, right? It doesn't do anything in and of itself. It doesn't create more value. It can rise in value, but it doesn't create more value. So do you think that gold is an investment or is it more a store of wealth for hard times?
Well, it's a great question. But we have to look at a really important factor when we look at the world. If we go back 30 years ago, China and India, affectionately known as Chindia, was 40% of the world's population. Today, there's still 40% of the world's population. But the population now is 7.5 billion people, not 2.5 billion people. And we look at their GDP per capita. So when you look at that fact, there's a high correlation of rising GDP per capita and gold consumption in China and India and Southeast Asia. And the reason for that is love. It's the great love trade. 60% of all gold demand is basically love. And every time gold gets sold down, oversold, perpetual bears on gold, China and India sales start picking up. And it's really key for me is to take a look at that. 30 years ago, they represented 10% of all gold demand, to now they're at 55% of all gold demand. So as their GDP capita continues, and we now can see that the US on GDP capita purchasing power, China, India, Japan, they're the four big beasts out there of this that are very significant for gold. Most of the gold demand in America is the fear trade, wealth preservation, protection. But I think that every time we get these sell-offs to recognize that the world is growing, more and more people believe in gold, and they wear their gold. They wear their love in India. There's 6 times more gold on women's arms and shoulders than there is in Fort Knox. So that is an important factor in that equation. The big swings are the fear trade you and I are talking about.
Yeah, why do you think there's so much of a cultural difference? Maybe why do you think really in the U.S. it's not really seen necessarily as money? It's more of like a fear trade safe haven.
Because we're a young country. We are the biggest GDP in the world, with less than 5% of the world's population. But by far, we punch way above when it comes to technology, military, healthcare, whatever it is, we're way up there. So I think you have to put that in context of being a young nation. Whereas in India and China, gold's been around for thousands of years as both love and a monetary aggregate. So I think from that perspective, it's longevity. Indians have seen good and bad governments, corrupt, come and go, but gold has always held its value and protection. The other part of that whole love trade, that those countries that own gold, it's important that you love your country, you should own some gold, because if you take a look at England in World War II, Churchill got his gold over to Canada, which then came to the US to be able to defend itself, get arms. If you look at the Vietnamese boat people, the first to get out had gold. So I think outside of the US, gold has this incredible capacity to have many, many uses to it. I think here it's going to grow because we have a very strong Indian population. If you look at the number of doctors in the medical profession, you look at Silicon Valley, et cetera. And friends of mine tell me that there's sort of still that cultural affinity towards gold as an asset class.
Now, besides precious metals, for 2021, what are other assets and investments you're looking into?
Well, the big part is the rebound we've had. And I was mentioning earlier that our JETS ETF has exploded right at the very bottom with young people like yourself buying it, because on every time there's a huge crisis, if you look at a year later, the airlines industry, which is close to 8% of the global GDP, it surges back and it has a big rebound of 80 to 100%. So we are up 60% from the lows, so we still have more of the upside. And I think as the vaccine news is positive, it'll show up in the airlines. But when it comes to the real asset in followers that you have, those are very concerned about preservation of capital. I think that blockchain is going to continue to prosper and grow. We're seeing Bitcoin far outperforming the markets. And one of the big reasons for that is because they have the supply of Bitcoins this year. Last year in May of 2020, can you imagine if they had the supply of gold from mines by 50%, gold would be at 10,000. So it's a real simple part of the global ecosystem buying Bitcoin. The supply is all of a sudden shrunk by 50%, then it would trade higher. We're very big in mining Ethereum and Bitcoin. I'm the chairman and co-founder of Hive Blockchain Technology, and it's been on a tear. We've had great revenue, great earnings, etc. But that, I think, is just a smaller component. It's much more speculative. Anyone buying Bitcoin or Ethereum or using Hive as a proxy just has to realize the volatility of any crypto is 5 times what the gold is on a daily basis and over a 10-day trading basis. So it's not for the faint of heart to buy a Bitcoin or Ethereum or a stock like Hive.
Definitely. I think that's an important distinction, that it is more speculative. Like if you're looking to preserve your wealth, maybe gold. But if you're looking to speculate and possibly make big gains, I mean, last year we saw a quadrupling in Bitcoin, right? So it's possible that could happen this year. But no one knows, and it is extremely volatile.
Very, very volatile. It's getting more adoption by pension funds, more adoption by Mass Mutual buying it and putting it into a wallet. Most of the hedge funds use the futures pricing mechanism. But I think that digital money is going to be the future. It's going to grow. And in tandem with that, real assets like gold and silver coins, I think you got to collect them. Every time there's a good sell-off, and know what the daily standard deviation of gold is. It's plus or minus 1%, 70% of the time. What's the S&P? The same. Gold stocks are different. Gold stocks are 3% daily volatility. And I think for what we're seeing now is that the gold industry the better CEOs, better boards, that these companies are now showing free cash flow yield, which is attracting more investors. So I think that the gold stocks are going to give you much greater performance in a rising gold scenario because there's greater discipline. And that's one reason why we started GoAU ETF, which is a quant discipline of picking these stocks every quarter. We high grade them and we focus 30% on royalty companies because they have revenue like Franco-Nevada, over $20 million per employee, and Goldman Sachs is $1 million. So you get this high efficiency, and they have a discipline of, as higher gold prices, they pay out a bigger dividend. So I like that approach, and I think that gold stocks, no doubt, like Ray Dalio, who runs the largest hedge fund in the world, he suggests for himself between 7 and 15% in gold and gold stocks, and rebalance every year. He himself, as a quant, as a hedge fund, they recalibrate probably once a week, but they do have an exposure to gold, and he's always been a big advocate of having gold as like a rudder in a ship.
Well, Frank Holmes, thank you so much for joining us today. Before we let you go, did you want to share with the viewers where they can find you online, where they can learn more maybe about your ETFs, GoAU and JETS ETF?
Well, we write every week. We have 100,000 readers plus all over the world, and the investment team publish the investor, along with myself, the investor alert. It's free. It's at usfunds.com, usfunds.com, or you go to US Global Investors on YouTube. We publish a lot of educational. We've won 88 educational awards for teaching investors new concepts, etc., and how to use volatility to your favor. So usfunds.com, sign up for Frank Talk, Investor Alert, and hopefully you can discover our products.
Fantastic. Well, Frank Holmes, Chief Executive of US Global Investors, thank you so much for your time today.